We will be working on we'll be working on the stock markets and how the things have transpired for the day, and what an investor can do for like how they can actually work out on the 1500 to 1800 point fall that has happened into the Sensex today. So I will be just sharing with you the screen, and from there we will take the things ahead. Okay, guys. So without wasting much of the time, we are here as the markets go. So if you see here, this is the broader large cap index as we see, and we can see here just it's all in the red, and just there are barring a few like ONGC, Tata or JSW. Rest all are into the red with the highest fall into this happening to around BPCL, which is around 5.5%. So therefore, one point here is if you're looking at a dividend income portfolio to be constructed, this is the right time where you can figure out on constructing your dividend income portfolio. That is the first learning from this current market crash that has come, because over the last many months, the market had been on a high valuation. So even if you would like, even if you would have intended to build a dividend portfolio, your yield would not have been more than 3%. But now there is a probability where many of the stocks have fallen by around 30-40%. So you can even have some very good stocks that could give you a yield of around 5 to 6%. Apart from capital gains, that is expected over the medium to longer term. So therefore, our this session is actually based on a couple of segments that we'll be covering into. We'll be covering into the market fall because of the Middle East. You can say the volatilities because of the Israel-Iran conflict, how the equities have been faring off, and then based on that, how the commodities as well as the bond portfolios faring off. So whatever the data we will be working on today will be purely the live data. So I would request you to be with me for the next 15 to 20 minutes as we proceed with the content of the today's live analysis of the market, and for investors what they need to do. So here, if we see that, we have seen that now here our job here is to identify. Okay, we have seen here three stocks are in the green, but at the point in time we also need to know whether it's the right point to enter or not. So among the current market vagaries, where is the price point, which stocks can we consider to enter into? So therefore, on the top, if you see here group scan, we had already put our proprietary algorithm into it, and let me run the scan. So here we are running the scan, and it will shortlist us the number of scripts that into the market based on the factors that we consider. Now here, if we see that there are technically 1, 2, 3, 4 and 5 stocks coming here. Here if we see one like granules and the JK paper, they are getting more of the B signals. B means buying signals for that matter. So putting into the granules, if we see, so here if you see here is one of the element that has come up. So here if we see the MACD convergence divergence has already given the buying signal. It is already into the buying signal if we say stochastics and RSI at this bottom, and here in this case as we see that the buying signals have already. Apparently, if we put the Fibonacci level, it has not yet crossed the 50% level. So therefore, it's not only that the system has traded and giving you a buy signal, you should go and jump it. If you are a risky investor, you could have taken a jump into the stock. But if you are mature enough and you want to weigh your gains and losses, and you need to ensure that you go with certain higher degree of probability to make money without much of the drawdown that comes with the risk of equity investing, you would have seen there is a yellow line. So yellow line is here the 50-day moving average, and green is around the 200-day moving average. So what you are doing here is you're seeing that the stock is just crossing here and still above this. So if tomorrow day after there's no for the market turmoil and all, we can see that over the shorter term it will cross it. But however, our position should go long only when it crosses the 50-day moving average. The best would be 61.8. That's around 75% probability you having the money, stock making the money for you. So second, if you see here is the JK paper. Now if we see JK paper here, here also if you see PSRs are okay. So here we are seeing that there's a 50-day and 200-day moving average, and it's just hovering between the two. So here it has shown as a jump, but it's not on the JK paper. The whole paper industry has given a jump today, but still we can't see here breaking the main resistance and support line, if I would say here like 468. So I will still not be very comfortable in taking a call as far as the JK paper come. But yes, one if we still see and want to take risk over is the HBL power. HBL power, which here it has nearly touched it and making a base of around 50 or 61.8%. So this is one we can still look into considering over the medium or rather short-term basis for entry. Now, the point I'm hearing here is trying to say that if you go here, and you go here, this. So there are ample stocks with a selling signal already coming in. So here, if we go here, now see here there are ample stocks with a selling signal already going in. So here, if you see, it is already a falling signal. So you need to identify among all these stocks which ones are the ones you would really like to pursue. So here, if we so go, okay, so I will say, okay, so the other couple of stocks I can still consider pursue going in, but here, if you see, it has already given a buying, it went up, you can say till 2474, and from there it has again falling to 2413. So nearly 60 points fall had been there. So therefore, the matter of fact is whether I would still like to go here. I would not, because the broader market is falling. So I need to have certain cushion or support for a stock to go up. But however, within the same market turmoil, we have seen these stocks actually making a headwind. So this is how it goes. The second thing that we can look into is we will be looking into how the markets India and globally have been doing. So for that, we will be showing you the same over the money control and how you can traverse the data. And then we will be coming on to the bond portfolio, which is one of the most crucial ones, because at the end of the day, if you're seeing the markets going down, if you're getting out of equities, or if you want something to be safer, so you need to know how they perform when the market goes down. So here I am just changing the screen, because that is on another presentation. So we'll go to screen this, we'll go to screen 3, this, and share. Okay. Now here, if we see that, we've seen that the market has gone below 800 points and all. Now everybody's seeing this money control screen. But the point is whether you are able to infer sufficient data, or you are able to crush the data and get the relevant information out of it or not. So therefore, we'll go into the global market. We'll just see how global markets are doing. We've seen Indian markets going down by around 2% today. So if we go here, we are seeing like US markets have not still opened. As of now, we'll go to European markets. We are seeing here FTSE at around plus 0.16, and CAC and DAX around less than 1%, or around 1%, you can say negative. The Nifty had been going 2% down, obviously because the stocks have been highly valued, overvalued. So therefore, it was one of the reasons for it being corrected too much. Hang Seng had been positive. It has also shown negative signs. The Nikkei has been up by around 2%. Set composite. So if you see from these markets over here, it's the Indian markets which have actually overreacted to the information. Now, if we see here the gold itself is down. It's not up. The crude has gone up. It had been over 1% and all, but still it had moderated to around 0.99 or 0.88 for that matter. If we see currencies, the currency change has happened here, and the change has been 0.22, 0.15% if we see USD INR. Now the main thing comes in. Now here, if you see the bonds, which the point I was referring to you in the morning, the bonds around 5-year bonds, so it is around 2%. So the 5-year bonds have gone up by around 2% in terms of yield. On the YTD basis, you might be seeing minus 3.79, but the matter of fact is we had been recommending clients to get into the bonds over the last 3 to 6 months, and during which the yield of the long-term bonds have increased. Now I will just show you how in an actual portfolio these bonds, jo aap yahan 5-year, 10-year, and 30 years, you are seeing that how this is impacting on your portfolio if you would be having these long-term bonds in your kitty. So here I am just showing you the portfolio. Okay, I will just log in and show you. We're going here. Just a second. Just okay, we have got this. Now, if you see this as a portfolio, this is a live portfolio. Okay, so these are the debt funds we are looking at, and if you see SBI Crystal Gilt Fund maturing 2036, providing the yield of 11%. 10.68 is providing the Kotak Gilt regular fund growth. And here we are having a 13% in the SBI long-term fund and 9.2%. The matter of fact is because funds these funds are actually having the long-term bonds in the equity for an average duration of around 5 to 7 years, or 5 to 9 years to be precise. So therefore we have seen that translating into the mutual fund yield. So even the debt funds now, with the falling yields and higher volatility into the global and equity markets, are now giving exorbitant returns, I would say. Now with Indian government or finance ministry now coming up with the repo rate cut, we can see this even going higher further to 12.5 to 15 to even 18%, which had actually happened in the earlier past also, because for every 0.5% fall in the repo rate, we might still see around 2.5% increase in the yield. The matter of fact is whether you are a part of this bond investment or not would be the question for you to actually realize it. So if you get into these right now, the upswing would be there, but not to that extent what you have been actually seeing. So therefore we have here seen that how while the market is being corrected, and if you have a proper asset allocation with bond funds also in your kitty, or bond ETFs in your kitty, or secondary tradable bonds in your kitty, which if of the very good quality and duration for which you have kept, is one of the most tantamount, one of the most paramount thing to be considered. If that has been put into perspective, then obviously you will be able to make returns out of that. Whereby the equity per se goes, it is a momentarily fall that has happened. It provides an immense opportunity to create a dividend portfolio for yourself, which otherwise had not been possible over the last 1 year. But now that possibility is there to have better yields on your portfolio. Even for those investors who are willing to take the long-term bets or the long-term bonds, because I was having a conversation with one of our clients that we want to build a long-term portfolio. When the stocks are highly valued or overpriced, you cannot have a long-term portfolio build up, because you cannot be buying a stock which is trading at 150 or 100 or a 90 PE price to earning ratio. So therefore you have to wait for a time when the markets cool down, the stocks crash, the PE comes down, and then you take very good quality stocks for a long-term strategic buy. That is how it has to be played when the long-term strategy is to be done. Again, it also depends upon the cyclical factor of the industries, whether it is the bank or whether it is the consumer durables, and how the pricing or the trends cyclical to that particular industry also plays, apart from what globally it is happening. But at the end of the day, what my personal take is, when you are into the markets and you're looking it as a trader, you need to get into a stock which is into the you should have a tailwind, not a headwind, when you are actually trading into the stocks. Thank you so much. And this is Rajat signing off. We still do not have got any other stock than that in the beginning when we're looking at some of the recommendations out of our algorithm. We still have those 4 stocks listed, but still we will still wait today how the Midwest, this tension between Iran and Israel pans out, and then the positions will be taken up. Thank you so much. This is Rajat signing off. Thank you.